Indeed, we see the impact of this ongoing conflict around global markets and also around all markets. But let's get to our first conversation. The ongoing conflict involving the United States, Israel, and Iran is raising global concerns, particularly in the energy market. As tensions rise in the Middle East, experts say the situation could have significant economic and security implications for Nigeria. Nigeria depends heavily on crude oil exports to fund government spending and earn foreign exchange. Because of this, any major crisis affecting global oil supply often has direct consequences for the Nigerian economy. One of the immediate effects of this conflict has been an increase in global crude oil prices. The tension in the Middle East has raised fears that oil shipments from the region could be disrupted, especially through the Strait of Hormuz, one of the most important oil shipping routes in the world. About 1/5 of the global oil supply passes through this narrow waterway. When there is uncertainty in that region, global oil prices usually rise. For Nigeria, higher crude prices could translate into increased export earnings and improved government revenue. But the country currently produces around 13 to 15 million barrels per day of crude oil, and with higher prices, each barrel sold on the international market brings in more income. Well, let's bring in my guest. He's Mr. Gabriel Idahosa, CEO, UHY Professional Services, and a former president of the Lagos Chamber of Commerce and Industry. Thank you so much, Mr. Idahosa. It's good to have you join us this Friday afternoon for this conversation.
Thank you, Tolu, for having me. Good afternoon.
All right, then. I don't know how worried you are, but I am, as at today, above $80 for a barrel of oil. Of course, we've seen markets having the same flip-flop move that we used to see whenever there's this kind of development globally. What do you make of this? How does it affect us as a country, in your understanding?
Well, Tolu, perhaps this situation is not very strange. We have been there before in the last few years. We were here during COVID. We were here during the Ukraine war that is still going on. And so there's some level of familiarity with this kind of situation. And perhaps every major economy in the world has a sense of deja vu that, okay, here comes again. We thought this kind of situation is not going to happen very soon. But we are talking of a few years in history that we have had three major disruptions to the world economy, not just oil, but entire world supply chain of everything. Products, anything, product services, flights, everything disrupted. So to some extent, you will say that there's some level of experience in dealing with this. Every country, including Nigeria, had to rise up to COVID, rise up to Ukraine, initial Ukraine shock. So yes, so being worried, yes, worried that particularly for Nigeria, we are not in the position to make maximum benefit of this. If we were where we had hoped to be, 30 years ago, our target was to be producing 4 million barrels a day. 30 years ago, that was our target in the industry. But today we are talking of less than 2 million barrels a day. So the kind of opportunity that these situations have provided in the past, are providing now, are not fully utilized by a country like Nigeria, who is a major oil producer. So you're going to find a few countries in the OPEC space, from Russia to the other countries outside the Middle East that are not affected, taking full benefit of this. So I think that's where we are more like missed opportunity for Nigeria. Of course, on the other side, we are getting the ripple effect on the downside. Oil prices are naturally gone up. Local refined products have gone up. We have inflation now likely to spike unless the crisis is quickly arrested. We don't know how likely is going to be because of a very, very strong likelihood of Iran wanting to exact some amount of revenge before listening to any appeals for coming down. So all the disruptions that have happened before are here, and essentially for Nigeria, what we can say is good about Nigeria now is that we have been able to stabilize our foreign exchange market. Our foreign reserves are in a good place to deal with this kind of situation. And in fact, from what we see now, our foreign exchange reserves probably continue to rise slowly but steadily through this crisis, that is in the medium term, where we feel that we cannot significantly increase oil production, so we can only get a little benefit from the increase in prices we are seeing.
It's a good way really to start that conversation when we see that we expect more money to come in into the country. Even it's above our budget benchmark that's for crude oil sales at the moment. So even if we ramp up production, we could even get more. But let's look at something you mentioned, impacts on inflation. This is a time where we are counting or trying to count the gains of the reforms, and now this is happening. If this lingers for some time, what should we expect? How does it impact us as a country moving forward? We did not truncate some of the gains of the reforms of this administration.
Well, it depends on how long it lasts. There's a lot of pressure on the main actors in this war, America on one side, Iran on the other side, to calm down. So it depends on how long it lasts. We don't expect it to last for another 3 years like the Ukraine war. And so we expect that in the next month or two, or at the most, Iran and America will somehow be convinced. But if it continues for up to 6 months, if we still have this war going on for another 6 months, and you will see the initial inflation in 1 or 2 areas like crude oil and refined products spread into all other sectors of the economy, because the logistics industry is driven by particularly the cost of crude, or most vehicles at the sea are run on diesel. So if this continues for more than 2 or 3 months, we'll begin to see the inflation spreading, and then, as you hinted, it may unravel some of the benefits and the gains we have seen so far in fighting inflation. But so we have to look at how long it lasts. If it's more than 6 months, in fact, it's more than 3 months, then we should get worried regarding how it will affect our inflation targets as a country.
FPIs and FDIs are what we've been talking about, attracting investment here and there. But when all of this happens and, you know, there's uncertainty around the globe and the Middle East and all, do you think that it will still turn out as expected? What do you think of our level of still attracting these investments? Just yesterday, we heard about the deep water issues. I think one of the oil servicing companies that was resolved. And we've seen companies showing interest in coming back to Nigeria. Some will say because of the stability in the FX market, predictability in our entire business space. But if this also, will this have any effect on expected projections for FDIs and FPIs?
Well, I think the good news for macroeconomic space of Nigeria now is that the international community is very confident and happy of our outlook in the next year or two. We know election is coming, because the fundamentals have been addressed in the Nigerian economy. The fundamentals around how we manage foreign exchange. The international community are voting with their FDIs in the way we have managed foreign exchange, the removal of fuel subsidy, and very important reforms about how issues are resolved. You find that after the divestment from the IOCs to Nigerian oil companies, the NOCs, which was applauded by the international community. A lot of FDIs are coming on the back of that. Those FDIs will definitely continue to come because the world has to move on. Whether you had war in Ukraine, whether you have war now in Iran, the rest of the world economy has to go on. And Nigeria remains the best business case for investing in Africa. So a lot of those FDIs will continue to come into Nigeria. But there are specific concerns around countries in the Middle East. Countries like UAE and Qatar and even Saudi Arabia have made some really large FDI commitments in recent times. In specific cases, the Lagos-Calabar coastal road, where the financial institution in the UAE is a major participant in funding that project. We expect that in the short term, most of those FDIs will continue to flow because they have been committed, the funds are already available. But it's, again, we look at how long if this work continues for maybe 6 months or more, the capacity for FDIs from the Gulf states might be impacted because they will need a lot of resources to rebuild what has been destroyed. And they also have to look at their own projections of how much they want to stake outside while they're trying to rebuild their economy. So that is the picture now of FDIs. But generally, FDIs committed are coming in. There are a lot more that are being planned as we speak. And there's a good chance that most of the FDIs from Europe, from Southeast Asia, will continue to come by the pace that with the pace we are currently seeing. Interestingly, we are attracting significant FDIs from North America and Latin America. So the FDI space is looking pretty positive for Nigeria, irrespective of in the short term what happens to the Gulf states.
All right, another very important one is at this time where we are doing a lot of local refining, thanks to the Dangote refinery, many will expect that we would be able to maybe manage a bit of scarcity, or if there is any form of maybe crude or whatever, we could be able to refine in country and get more products out. But Dangote will still have to buy crude, and if crude is sold at a higher rate, it would also have to sell PMS at the pump, definitely come higher. Now, are there opportunities for us in all of this? Because many would say for a country that has proven and unproven reserves, both of oil and gas, and now this is happening, what really do we have any opportunity? Can we take advantage of anything? Or are we not prepared for times like this?
Well, the opportunity is in the medium and long term. It takes quite a while to develop a well and bring crude oil out of it. And you can't do that in 3 months when this war looks to be. But definitely, it's already happening. Tolu, you're probably familiar with news that Nigerian oil companies, oil exploration and production companies, are now producing more than 50% of the total oil production in Nigeria. And that speaks directly to your question. These Nigerian companies are working very hard. If you are in their community, they are investing and working very hard. They are recovering a lot of the oil wells that were locked up for many years by the IOCs. They are investing even offshore. So if this were to happen maybe 2 years, 3 years from now, the kind of opportunities you are saying will be there, and Nigerian oil companies will actually be able to export crude to people that are impacted by this kind of crisis.
Interesting stuff. So let's again now wrap up with an outlook. The last MPC meeting, we saw a bit of easing in rates, and which has been commended, I'm sure. I'm sure you would want to also react to that. Maybe it wasn't as much as you expected, or you wanted more than that, you would tell us. But all the same, we've seen a sign of easing from the Apex Bank, and many thought that we're going to continue to see that decline in inflation moving forward in 2026. But as it stands, what would you project, again, like you always, the short to the medium and to the long term Nigerian economy, considering the fact that it's a pre-election year?
Well, the thing is, what is giving a lot of confidence to both the international and in Nigeria here, the domestic business community, is that we have a central bank governor and management now that is very, very strategic in the way they are managing our foreign exchange markets. And it has always been expected that as inflation kept going down slowly throughout 2025, 2026 will be the year where the MPR will start going down slowly but steadily. And that is what we are seeing. There's still enough reason to believe that CBN will stay with that trajectory of looking at steady reduction, slow but steady reduction of the MPR. It's not likely, at least by the next MPR, that the inflation, any inflation created by this war will start to crystallize. The hope being that between now and another 2 months, somehow Iran and America will have been convinced by the rest of the world to stop this. So we do not, the outlook now, certainly for the medium term here and the rest of the year, is that inflation will be contained within the current parameters and possibly retain the trajectory of steady decline. And therefore, that should be followed by slow but steady decline in the NPR. That is the outlook now. And it's only if, say, if we are in July and the war is still on, that everybody will go back to the drawing board and see, okay, what's going to happen. We'll now concentrate after July. How long is it war going to last if it has not ended by then? Because nobody could have projected the length of the war in Ukraine. So if by July this one is not done, everybody will have put on their crystal balls and start to say, okay, is this going to happen for 1 year or 2 years or 3 years or war? And what does that mean for the economy, for the world economy? But between now and December, if this war fizzles out as expected in the next 2 months, then the systems are already put in place by the central bank will continue to be all system go in terms of reduction of inflation and gradual reduction of the NPR.
What are the feelers from the business community considering all of these challenges and uncertainty that we see? How are they trying to cope? You know, we are at the point of implementation also that has started of the tax laws. What are the feelers, Mr. Dahusa?
Well, first of all, the tax law, the feelers is good. As I was saying to some people just a few days ago, that you can see that there's some amount of quiet in the trade unions and the all business groups, because the benefits are beginning to show from the end of January. I'm sure Tolu, you know what I mean.
Yes, I know. I know.
Salaries.
I know.
That we are beginning to see the benefits in our bank account. And you say there's some level of quiet. Everybody that wanted the head of the Mr. Edele seemed to have decided, okay, fine, we see it now. We are beginning to see what we are talking about.
Yeah.
So the outlook is very positive, that things are on the right track. The primary concern now is the social safety nets for those at the bottom of, if you like, the economic pyramid. One of the really heartwarming outcomes is that a lot of low-income people are now free of tax. A very large, I can tell you, to a very large population of Nigerians at the lower income levels are free of tax. The figures have come out, they see they don't have to pay tax. And there's some sense of relief that somehow this country now recognizes that some of us should be spared from this tax wahala. So that social safety nets to take care of people at the lowest level so that they can feel that they are getting some benefits from these reforms is what will be perhaps the most important agenda. We also are seeing some of it coming in transportation. The rollout of CNG buses across the country, cost of transportation is beginning to come down slowly in a couple of places. So those are the things that we believe as a business community can contribute a lot to facilitate the implementation of these reforms going forward.
Mr. Gabriel Idahosa is the CEO UHY Professional Services. Thank you so very much for your time on the program. Also, a former president of the Lagos Chamber of Commerce and Industry. Must always say that to remember. I must thank you so much for your time. Enjoy your weekend. Thanks for your contribution. We really do appreciate this.
Thank you. Thank you, Tolu.